Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, February 27th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. We'll start with the big picture, work our way into the day itself. This is a weekly chart that goes back several years, and I'm pointing out this sort of 6-8 month channel structure that we've traded inside of now, following the July high. We most recently tested the top of it. In fact, the only time we've actually tested the top of it, truth be told, was about, I don't have the exact date, late December. That was the week of Christmas, as I recall. The 251.76 channel top, able to contain monthly, possibly quarterly buying pressures. We'd mentioned that as we were testing it, you should then allow for 3 to 5 months bearish rotation to the channel bottom that is presently at 168.82. That took about 6-7 weeks to complete, certainly inside the 3 to 5 month time frame. We did test this channel structure about 3 or 4 weeks ago. You can count 4 bars here. We're early in the 4th one. So 3 weeks ago, we tested this 168.82 channel bottom. On the daily chart, I can show you that it actually comes in at 169.89. So it's inside this 168.82 to 170.19 region. Let's take a look back at this chart again. 168.82, having tested it, we've been mentioning now for the last 3 or 4 weeks that you should now allow for upward rotation over the next 3 to 5 months, back to what is now 251.76. There's no clarity on that expectation. We don't expect 251.76, but with respect to channel structure probability, you can plan for it. You could reach for 250, 245 strike out of the money calls that don't expire for at least 6 months, as we've been mentioning since testing this channel bottom 3 or 4 weeks ago. Now, in terms of the buy signal, we do have a descending 1/3 speed line. We're now using the weekly chart on that level. We're using 207.83. The daily chart version is a little bit lower at 207.39, but because of its longer term status, because it goes back some 6 or 8 months, we think we can hold to a static level all week long at 207.83 as our resistance that can, number one, contain buying through March, and from here we can fall back into the upper 160s again within a matter of 3 to 5 weeks, back to 168.82. And inversely, if we do close above 207.83, and this, if a daily settlement above 207.83 is certainly a constructive development. And, on an intra-week basis, that 1% level at 209.90 should be watched. You can see in the upper right here, if we close today, for instance, at 209.90 or higher, that is an actionable signal, actionable at the very least in exiting a short position. And you may begin to acquire a long position, but in terms of clarity on what I would expect within possibly 3 to 5 weeks, probably the better part of 2 months, this retest of the low 250s would be expected with a settlement on Friday at 209.90 or higher. That is to say 1% beyond the 207.83 speed line. We like to use the 1% violation thresholds for what I would consider to be a buy signal reliability, because if we were to close, let's say, at 207.90, technically that is a buy signal, but it is so close to the line itself that the market could easily back off Monday morning and open right back below that speed line. So it really is 209.90 settlement on Friday or higher that would then signal clearly the 251.76 to 253.49 region. This is, by the way, a combination, not only a channel top, but also a descending two-thirds speed line. And so what I like about this is, with respect to speed line analysis, when you settle above a descending one-third speed line, as 207.83 is, the descending two-third speed line that is at 253.49 becomes your next big picture objective. This could be with a high volatility move within 3 to 5 weeks. Under present volatility, it could be 2 to 3 months, but somewhere in there. And so if you have yet to buy or reach for those 245 or 250 strike out of the money calls that don't expire for at least 6 months, and we were to close at 209.90 or higher on Friday, that is your next opportunity to do so. But until then, all this bullish talk, this is an area that inversely can contain buying through March trade, as I say, and once tested, we can unravel all the way back to the 168.82 channel bottom. So that is the big picture. Now for the day itself. I've been talking about this rising two-thirds speed line at 190.69 today. That is still solid pullback support, and above which we do maintain, I've been talking a 1 to 2 week target at 207.39. With yesterday's volatility, we actually could test it over the next day or two. And in fact, this rising channel top, this 4-day channel top that actually performed well in containing Monday's highs, 202.31, we've reduced to an intraday resistance only because of the couple of things. The fact that we're above the 190.69 speed line, that is a constructive, we are expecting 207.39 as a 1 to 2 week target. The fact that we came so aggressively off this congestive area that we played out through much of last week. 202.31 intraday resistance, able to contain intraday buying pressures, not comfortable suggesting that it can contain daily buying pressures. If we push or open today above 202.31, we should today test this long-awaited 207.39 speed line. I say long-awaited because we've been pointing this out as a 3 to 5 week objective since testing the channel support at 169.89 about 3 weeks ago. And so pushing or opening today above 202.31 should yield 207.39 intraday, where if you've been long for the last 3 to 5 days or several weeks, profits can be taken. And if you're comfortable playing both sides of the market, you could play the short side. You could sell it short, 3 to 5 day traders back to 190.69, or 3 to 5 week swing traders, you could sell it short back to 169.89. But once again, closing above not only 207.39, but also above the same exact speed line on the weekly chart all week long at 207.83. And yes, you might as well on an intra-week basis throw in that 1% margin of 209.90 does set off a buy signal that I'm expecting to play through March and into April trade within 2 to 3 months or less, the low 250s then anticipated. And so if we close once again at 209.90 or higher today, you could consider reaching for 250 strike out of the money calls that don't expire for at least 6 months. Back to the day itself, we have this 190.69 speed line that we've been mentioning now for the last week as your pullback support. We've yet to actually test it, but if we do test it today, and it is in reach, by the way, today, below 202.31, I can't say that I'm expecting it, but holding below 202.31 does allow selling pressures to emerge, allowing for 190.69 within the day, where we can place a weekly low, and above which 207.39 is likely, I'm going to say now, over the next 3 to 5 days. Now, yes, closing below 190.69 is a sell signal, but at this point in time, and this is going to change a little bit every day, I'm not comfortable playing the short side through the rest of the week and into next unless we close below 187.74. So the way I would frame this is bottom picking 190.69 3 to 5 day swing traders in anticipation of 207.39. And then inversely, selling a settlement below 187.74, 3 to 5 day swing traders and 1 to 2 week swing traders, then anticipating a return to the 169.89 channel bottom. I can see that 170.19 was not updated, should be 169.89, but it really doesn't matter. We're not going to see that today. The channel bottom on the weekly chart, once again, comes in at 168.82. Now, the last thing I'm going to say is a big picture framework, and that is to say that if over the coming 2 to 3 weeks, and I'm not expecting it, we were to close below the 168.82 support by the 1% margin of 167.13 or lower at the end of a week, all those calls you may have acquired should be liquidated, and in turn you should turn around and reach for the 94, 95, 96 strike out of the money puts that don't expire for at least 6 months. I consider that to be a 2 to 3 month sell signal into the mid 90s and dropping, preceded by the 101.81 January 23 low. But I'm not going to spend any time on this scenario because it's not likely, at least over the next few weeks. And what I will leave you with is this image here, the most appropriate for the day, 202.31 intraday pivot point, below which 190.69 in reach, above which 207.39. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial. You can see everything that we produce over the next 5 days. And if you don't like what you see, you can bow out at no cost to you whatsoever. We'll be back tomorrow with Wednesday's Tesla, and you have a great day.